Welcome to Walk Away Wealthy. I'm your host, Alan Terrell Gregory. If you're thinking of selling your existing business or looking to untangle yourself from your old business so you can start a new one, you came to the right place. Today, I have a very special guest, Anthony Gordon. Welcome to the show.
Thank you, Alan.
So tell us a little bit about yourself.
So a little bit of background about me. I'm a financial planner now, but before a financial planner, I was a lawyer. So I have a law degree, have a master's in taxation law. First did a bit of estate planning, and then I got into corporate commercial law. So I did that for several years, and after I had, decided that, this is where I wanted to transition and make a different change, I got into financial planning. And the question I always get to people, okay, you're a lawyer, why the switch from law to financial planning? And so the whole thing was, when I got into taxation law, I got into taxation law really because I saw the opportunity. I just want to know about money and wealth and generational stuff. I didn't know taxes was a huge part of that. So in law school, when we did taxation, the first course, I was like, okay, this is interesting stuff. And then I was thinking, could I take some advanced courses? People are looking at me like, why the hell would you ever want to do that to yourself? But I took them, got interested, and ended up doing a master's taxation. So once I was done with the corporate commercial stuff. Before, when I used to draft wills, I used to always communicate with financial planners. And I also kind of found it interesting how they themselves work with clients. It's more for personal note, where I find with lawyers, it felt more transactional. Where financial planners, you have a set of clients, you meet with them a certain amount of time. It's an ongoing relationship. You have goals, and you kind of push towards attaining those goals. So I went back and I, did some designations. I got a CFP, CLU, CA, CEPA. We both have CEPA. We have that in common. So that's kind of how it came about. Another question I often get is, why did you work with business owners, right? A lot of my clients were professionals, of course, lawyers, because I'm a lawyer myself, so that's natural. And I started to work with a lot of individuals who were lawyers, and they had their own practice. Some of them were smaller, some of them were bigger, but they had their own practice. And over time, I started working with business owners. And the gap I found was that as a financial planner, when you work with an individual, you look at your assets. Okay, this is how much we're going to have. This is what retirement looks like. This is, from an estate planning standpoint, this is what the estate looks like. This is what we're going to transfer, all that fun stuff. But with business owners, it was just business. What I realized was there's this huge gap of working with business owners in terms of how businesses work and the valuations and all of that. And for some business owners, it's 80% of their net worth. And I'm not having this conversation. So I felt like, okay, I needed to, get sharp on that. So I started reading, started doing stuff. It's kind of what led me to CEPA also. So once I started doing that, I was like, okay, this is kind of where I want to go. And I kind of stuck with it there. So that's how I got into working with business owners.
So yeah, tell us a little bit about CEPA, number one, but also tell us how and why you specifically got started helping business owners with retirement.
Okay. CEPA is Certified Exit Planning Advisor. I used to be part of a referral group, and an individual came to the referral group when I was missing, when I was there, I couldn't attend. And he said, hey, somebody said I should speak with you. So I'm just reaching out to book a one-on-one. So this guy was an accountant, and he was certified business valuator. So I started talking with him, and we started talking with business owners, started sharing my experiences with business owners. He started telling me about business owner, how he works with business owners. He does the business valuation, and he does exit planning, and the time and the methodology and all that. I was like, you are the guy I've been looking for all this time, because when I speak with accountants, they don't talk like this. And I'm reading all these different books and I'm putting it together. And when I speak with accountants, at least the ones I've spoken to before, they don't, it's like a disconnect, or, we're halfway there. We're not, but I completely align with everything you're saying. And I said, where'd you get all this stuff? Where'd you get this information? He goes, I'm CEPA designated, right? And so he gave me the book, Walk into Destiny. He said, okay, I have a gift for you. And he mailed me the book. I read the book. I read Walk into Destiny from cover to cover. I did it pretty quickly. And then I said, I'm going to do designation. And before you know it, I reached out to CEPA and I did the designation, because what I realized was that it helped really put everything together in this neat, nice package. I was like, okay, yeah, sign me up. And the rest is history in terms of CEPA.
So working with business owners specifically for retirement, what's the how and why behind that?
Okay, so here's the thing. When I started off, I was, work with younger clients, young professionals. But I got really focused again on taxes because the average Canadian pays about 42.6% in taxes. Once I started talking about taxes and retirement, because it was kind of logical, it just attracted a bunch of people who were retirees. I started getting a lot of retiree clients, just average professionals too, but a lot of business owners. And then from there, I just started speaking about estate planning also, because with taxes, retirement, a lot of estate planning questions come about from that. And then I also put out a book called The Art of Retirement, which is an Amazon bestseller. And so, of course, it just kind of, that just became my talking piece. And so that's kind of where it comes from. It comes from me starting to talk about taxes, me talking about taxes and retirement. And then from there, I started the next step, obviously, is talk about estate planning. So I do a lot of that. So that's where a lot of that comes from.
So I want to touch on something here. So I want to find out, what are some of the common challenges business owners face when thinking about retirement? That's something you kind of mentioned.
A lot of business owners usually don't think about retirement until they're pretty close to retirement, unfortunately. They might have an insurance plan here, some investment there, or they've done stuff along the way, but they haven't done like a holistic thing in terms of retirement. And then something happens, either somebody passes away, they get divorced, disability, something happens, some trigger happens, and they go, okay, I need to take stock of where I am. I need to figure this out, because if something were to happen to me tomorrow, I don't know if I'm in great shape, right? And so what happened is, when it comes to retirement, they're at a place where a lot of moving parts and a lot of, very little planning has taken place. What I find also is that when I work with business owners, they sometimes keep everything separate. So they have some insurance stuff and they take their salaries completely separate. Then they have their business is completely separate. But their goal is to sell their business, get some type of money from that. But a lot of times they have no idea what that amount is, which is where, as a financial planner, I come in and I go, okay, tell me about your story. Tell me about why did you even get in business? What the next steps are. Why is that important to you? Get a clear sense of their values. And then once we do that and we have a clear sense of where they want to go, we look at where they are now in terms of their personal assets. And then we look at, okay, if there's a shortfall, how much of it needs to come from the business? And if there's a shortfall, we call that the wealth gap, right? And with that wealth gap, now we have to look to the business, and then we have to look to the business to see, okay, what are the ways that we could take those assets and take that capital from the business and bring it over into your personal life. So now we're talking about taxes, we're talking about financial planning, we're talking about looking at corporate planning, we're looking at, okay, probably even shareholders agreement. You'd be surprised how many people don't have shareholders agreement if they have other partners. So the big challenge is just, for one, getting clarity of where you want to go. And the second thing is actually having something in place in terms of a strategic plan to get you there. Because a lot of time business owners just say, okay, I want to do this, but there's not realizing that we have to fulfill, take all these steps before we actually get to the ending point. So the big challenge is really just clarity about where you want to go, and then clarity about what you have and where those things are and how it all works together, so that we could help you achieve your goals.
How do you help business owners accelerate the value of their business prior to exit?
Very, very good question. All right. So what I do is I take a very much a team approach. So I'll sit with business owners, and because I have the CEPA training, I've read a whole lot about valuations and stuff like that. I could, just by asking questions, I could see where the gaps are. I can see where the gaps are in terms of heavy reliance on a particular client. I could, if there's heavy reliance on a business owner, if there's heavy reliance on certain individuals, if there's no standards of procedures that's literally laid out in terms of, what should happen if this individual, what are the steps to take, and what activities an individual needs to do to fulfill a position. And so what I'll do is, just by speak with a client, what I do is then, okay, I realize, especially if they want to sell the business at some point, but depending on where they are, I have team members that I work with. And so I will bring those individuals in. And of course, it starts with just a benchmark of where we are now, right? So we get a valuation. And I always, If I work with business owners, at a minimum, I like to do a soft valuation. So what's a soft valuation? Soft valuation is maybe bring a business broker in or the accountant in to say, okay, based on everything here, we do a soft valuation, right? So we get a sense of where, how, we look at the last 5-year financial statements, get a sense of where the client is now, and then from there, that will tell us the gaps because we're going to ask all these different questions. And so from there, once we see the gaps, then we just start saying, okay, these are the things we need to start working on. Usually the first thing we do is start protecting the business. It's the fastest way to increase valuation, right? So you look at a business, where are the gaps and what we could do to protect that business. And then once we protect that part, then we go from there.
So you start with evaluation, you find out where they want to go, and then you plug the holes.
Yeah, definitely.
Understood. Got it. So how much time is needed to plan and execute a successful exit for a business owner?
It depends, right? I mean, so generally what I've seen is about 3 years. It doesn't have to be 3 years. I think if a business owner, like business owners I'm working with now, we're at a point where I'm starting at is, okay, we're doing a financial plan. And then what we're going to do after that is get a valuation, soft valuation. At a minimum, we start to know where the gaps are. So we start to put things in place. When I work with business owners, I like to do succession plans. So we start to look at, okay, who are individuals? Who are the employees? Who are the independent contractors? What would happen if this person leaves? Or better yet, what's this person's responsibilities? What are their outcomes? Have you documented that? So if you start to put these things in place, it gets the business owner thinking because they start going, oh, this person does what? And this is their goals. Well, they haven't been hitting that for the last 6 months, but I wasn't even present to it because we're just moving, right? A lot of things like that would put things in place where we're on the right trajectory. If you have done nothing, I think you got it usually about 3 years. And, unfortunately for some individuals, if you're talking about disabilities and stuff like that, sometimes you just have to use a shorter runway. But 3 years, if you haven't done anything, is probably the ideal amount of time. I would say 3 to 5 years, really.
So what sort of financials do business owners need to provide you with in order to get a true valuation for the business?
So 5 years financial statements, that's where we start. And then you're going to have all these questions about your industry, about how you work, about your team, your organization, things like that. Because it all depends on your industry, depends on your type of business. But at a minimum, where we're starting off is the 5 years financial statements. And then we're going to ask you different questions based on your industry and different things on your practice. Because if you have certain industry, there's certain practices that you want to have in place. And so we're going to start asking all these different questions. But 5 years financial statements, probably where we're going to start.
So that's income statements, balance sheets, cash flow statements, tax returns, and bank accounts.
Absolutely. And even for individuals too, you want to look at the individual as a financial planner, you look at at least the last 3 years tax returns from a personal standpoint, because then you also see potential for tax planning and all of that stuff. And then for the business owner, everything that you just said. For a corporation itself, everything that you just said.
And sometimes I find that owners are a little bit intimidated with providing that kind of data. So you may have to connect with their CPA, their bookkeeper, their accountant, so that you can get it from them instead of having to burden the business owner with providing you with those items.
Well, yeah, it's always the accountant. And by the way, that's one of the challenges business owners have too. And sometimes you might want to suggest a difference. Say, based on what you're doing, you started off with this accountant, you're probably outgrowing this accountant. Because if I'm asking certain questions and you're behind on certain things and you don't have certain information, you're at a completely different level now. You're thinking about selling your business, and it's going to require a bit more information than somebody that's probably at a higher level.
So what's the difference between your services and that of a business broker?
A big difference is a business broker is really usually there to buy or sell a business. What I'm there to do is I help the client. I'm a quarterback the whole thing. So I'll help the client from a financial standpoint, personal financial standpoint, so financial planning from that level. From a business standpoint, so we're looking at the business on a whole and how that interacts with your personal finances. And another part, which is not often spoken about, or where a lot of people don't want to get into, is the family aspect of it. Because if you're thinking about selling your business, there's a personal aspect of it, and there's an emotional aspect of it. Quite frankly, when you own a business, a huge part of it is your identity. Sometimes a lot of people get to the finishing line and don't want to cross because they go, I can't give this up, right? So we have to have these conversations. It's an emotional thing when you sit with business owners that they know they want to retire, they want to, but they in your mind they go, but I can't picture just one day just getting up and it's all gone, and then your mind is, it's almost like a mourning stage where this thing was a part of you for so long, for decades. I know it just ends. For some people, they just go and build it up, sell, great. For a lot of people, it's their life's work. So that's what I do. I look at those three compartments, and then I bring the team in, and one of the team members would be the business broker.
Got it. So is it better for owners to begin working with you before securing the services of a business broker?
I'll say so, because usually people go to sell a business, they have a sense of, okay, I would hope to get a certain amount. How does that translate to your personal goals, financial goals, the goals and how much the type of lifestyle you want to have after you've sold a business, or quite frankly, the legacy you want to live to your grandkids or to your charities or your community. The financial planner is who should be the one helping you establish that. So when you go to sell the business, you know how much it should be. So you should be doing evaluations beforehand, get a sense of what that is, and if there's a gap, fill that up.
So when you say sell the business, a lot of people are, or at least from what I'm hearing from you, it seems like a lot of it is third party, so they can sell it to someone outside of their company or outside of their family. What are some other exit options besides a third party sale?
Well, the other one is a transition. And quite frankly, that's where the challenge comes in, because a lot of people build these businesses and they have kids and they have family members, but if family members don't, they'd love to transfer it to your family members. And I think for a lot of them it's emotional, because then you're somewhat still connected to the business, even though you're probably not running it on a day-to-day, but you can still pop by, you could still say, hey, how things are going. But a lot of kids do not want to run a business, right? Because they've probably grown up seeing their parents work crazy hours, seeing the highs, seeing the lows, and they probably focus on the lows, like we often do, focus on the lows and go, you know what, I'm quite okay doing what I'm doing here, or I want to be a YouTuber. I don't necessarily want to be a business owner, running your business or deal with all the client stuff or deal with lawsuits. Sometimes people get sued. It happens. We live in a litigious society. So that's a transition, right? So that's another way. Sometimes it's to an employee. It's better that way, because if it's especially somebody that you trust and then you could able to groom that individual and slowly transition. But usually it's, from what I've seen, my assessment, a lot of times the potential transition is to the kids.
So what does working with you look like?
I sum it up in a process. I call it a CADDIE process: clarity, awareness, direction, decision, implementation, and examination, right? So what it looks like is, first thing we're going to do, we're not talking numbers or anything. We're going to just go have that clarity conversation. Why are you even here today? What brought you here today? What's important to you? What are your goals? Where do you want to go? Just really find out at a foundation level what's important to you. Because if we know what's important to you, that's where we're always going to go at. When we need to make decisions, we'll go back to the clarity conversations. Well, okay, should we do this? Should we do that? Okay, let's step back. These are all the things that are important to you. Based on that, let's see what's the best decision here, right? So the first one is that clarity conversation. Once we have a clarity conversation, next thing we do is I talk about awareness, and awareness usually comes through data collection. That's where we start to look at the numbers, the books, the legal documents, wills, all that stuff. Now we have awareness of your entire financial situation. Once we have awareness, now we have direction. And we talk about direction, right? So I use a financial planning tool. It's an AI-based financial planning tool. And so, we have all these choices, and we say, okay, let's do if we do this. And it's an interactive thing. And then once we have the direction, we have to make a decision. Then we say, okay, this is the decision. This is where we're going to go. Once we decide it's the decision, this is where I create what's called a UIC around the client. Because you already incorporated, but as an individual, we now need to build a different corporation around you, which is a U Inc. And this is where I bring in all the other professionals, the accountants, the lawyers, the certified business evaluator, the value creation experts, the lenders if I need to, realtor, whoever I need, we bring them in. The life coach if we need to. We bring all of that in. And in that part of it, once we do the decision, because now we have a family Inc., we build it almost like a personal family office around the individual, right? Then the next thing is we start to implement. If you don't have a will, got to get a will. By the way, you'll be surprised. How many business owners, high net worths, have no wills?
Right.
So they don't have a will. So what we do is we start to implement. So now we have the team, we have the direction, we have the game plan. Everybody has a specific task, what needs to be done, right? And now we implement. Once we implement, then we start to hold people accountable to what they need to do, right? So the accountant, you need to recast the EBITDA, or we certain expenses that you're taking for your business. If we sell it, that's not going to be an expense, right? So all these individuals have a different thing from an implementation standpoint. And then what we do is we constantly examine, is this being done? Is that being done? If this is going over a few years, of course, we got to constantly see where we are each year from a net worth, see where we are in terms of plans, and we examine going forward. And we constantly examine going forward based on the plan we have. And if needs be, sometimes we go back and change the directions and change the decisions, right? And then, get different individuals in if we need to. And then we, have new implementations. But that really is a process. I call it the CADDIE system. And that's my framework. Because for me, it has to, be so many moving parts. I have to create that framework. So that's a framework that I create when I work with. That's a framework that I created that I use when I work with business owners.
Okay, so for all you listening, it's clarity, awareness, direction, decision, implementation, and examine. Right? So Anthony, what characteristics do your best clients exhibit?
Come in with an open mind. A lot of business owners, being the type of individuals they come in and they go, okay, let's just get this done and just get it going. They haven't really stepped back and get the clarity to see what's important, because what's important or value is always rears its head. Okay, wait. Why do you even want to sell? What's important to you about selling? But because what you do is something, just sell because it's so much headache. I just want to get the money and go. And then what you do is you get a value creator. Somebody comes in, somebody helps your business. You get to the finish line. It's almost like you stage your house. When you stage the house, you look at the house like, man, I said I want to sell this house, but do I really want to sell this house? If this house was like this before, I would want to sell it. So for business owners, it's kind of like the same thing. That you have that openness and to have that conversation before we get to the numbers. Because once you're openness to have the conversations and to look at the different options, it creates the awareness for us to make the decision.
Got it. All right. So we're wrapping up here. So I got 3 more questions for you. So this one is, what's your best advice for someone looking to sell their business or transition to a new one?
Just get the right professionals. And you're trying to save and do a hodgepodge type thing. It doesn't work, right? It's you go to the doctor because you think you have one problem and he tells you have something else. It's holistic, right? So it's the same thing. If you get a professional, like I say, start with a financial planner who, if not CEPA designated, one of the designation that helps with exit planning and stuff like that, who could bring in the team members for valuation, could bring in the members for the lawyer, could bring in the accountant, who could build all that stuff. So work with the right professionals to get clarity on your situation is the primary thing I would say is the first thing. That's what you really want to do.
Perfect. And what's one of your favorite quotes and why?
Ignorance is debt. I didn't even know where I heard that. I heard it as a teenager. I should look it up. I don't even know where it came from. I just heard it at some point. And ignorance is death, because when I say death, it sounds kind of dark in a sense. But when I say death, it means if what you know is what you know, but you can't see anything else, then you're dead to all the other options around you, right? But if you have knowledge, it opens up your vision, and that vision creates awareness, and all these other things that were dead to becomes an opportunity, and you have no given life to that. And that's what knowledge is. And by the way, it doesn't mean that you're always the one who's gonna take in all the knowledge. It just means you surround yourself by the individuals that give you that opportunity and the information that realize what your choices are. Because sometimes, and I'm pretty sure it happens to all of us, right? In hindsight, it's always great. Oh my God, if I had known. Oh my God, if I had known. And that's where, if you surround yourself with the right people, you would have known, because then the choices would have been there.
Got it. And how can people get in touch with you?
LinkedIn, you could definitely find me on LinkedIn. If you can't find, just go Anthony Gordon, financial planner. I'll show up. I don't think there's any Anthony Gordon as a financial planner. If there is, I should hopefully be a top. I also have a website called artofretirement.ca. So I could definitely be found there. The company is fiduciary.com. So I could also be found there. But LinkedIn is probably the easiest place. And my blog, which is Art of Retirement. which is based on the book I did. I know some business owners like, I'm never going to retire. Don't worry. I have a new book coming up and I'm going to create a site for the business owners. So look out for that.
Good. Well, Anthony Gordon, listen, I appreciate you coming on the show. Have a great day.
Thank you. Appreciate it, Alan.
Thank you.